Members Equity Bank is bailing in home loans. Let's have a look. Hello everyone, Florian Heiser here and welcome to another episode of Heiser Says. I have my stein of coffee and I thought we'd have a look at this article that several people have sent me regarding ME Bank and their raiding accounts linked to home loans. Now, this is something that I have been concerned about for a while, to be honest. I'm worried that property is overvalued throughout most of the country. And I'm worried that when the valuations of properties take a tumble, the banks are going to start calling on home loan owners, mortgage holders, like myself, and insist that you come up with an extra $50,000 to pay off your loan. Or take money from other accounts to pay down the loan to reduce their risk. And the bank can actually do that, guys. This isn't anything to do with bail-in legislation. They have the right to combine any money in all your accounts together. I had a mortgage broker who shared a story with me how he helped one of his clients who contacted him in a daze. His industry was involved in the airports, the shopping trolleys, the airports. He had his home loans, his business accounts, everything. Credit cards, everything with the one particular bank. Now, after there was a terrorist attack, this bank decided that they didn't want to be exposed to that risk in that industry. So they required him to close all his accounts within a month. Within a month. So he rang up this broker and said, I need your help. The broker found someone for him. It seems to be his talent, another bank to take him on. Packaged it all up, sent it over to him. Was really happy, really helpful. Got rid of that other bank and went to another one. The bank put a call on him. I can see that happening on more and more people, particularly when you go into negative equity, when times get tough. That's why when people ask, what are you doing with your investments, Florian? What are you doing here? I'm being very unexciting and pretty much throwing everything at my mortgage. Because I suspect that if we do get sharp property falls, the banks are going to be requiring people to make additional payments on top of their mortgage payments. What do you think? Do you think I'm just being a bit overly concerned? Maybe. Worst case, I pay off my mortgage unnecessarily fast. So let's have a look at this article to see what ME Bank are actually doing, how they're raiding accounts for home loans and for people. Now this is going to affect people because you think you've got access to that money, you budget for it, you plan for it. But I'm not surprised. I'm not surprised this is happening. And I know this isn't technically bail-in, but it feels like it to the people there who've had their money sitting there. They thought it was theirs. They thought it was ready to get access to. It's no different to the bank bailing you in money. And, well, actually, maybe a bit worse than bailing, because at least bailing you get your shares. Here they're just taking your money before you thought they would. So the boutique bank, owned by the industry superannuation sector, or the unions, has blindsided its customers by removing cash from accounts linked to home loans during a global pandemic that has increased financial uncertainty. Members Equity Bank, which is owned by 26 major super funds linked to big unions and markets itself as one of the country's most trusted lenders, stunned customers on Monday when it, without permission, removed funds from redraw facilities to pay down home loans. Well, no, I'm sure they had permission. I think it should be written without advising clients that they were using the facilities they had in the contracts the clients had signed. That is what I would bet. Because, by law, the banks can they can combine everything together in all monies. Guys, that's why you should keep your business bank account separate to your personal bank account, which I know is a pain. I really do. But on its website, ME Bank promotes its redraw facility as a product that allows customers to make extra mortgage repayments with the added flexibility of letting clients redraw money from your loan at any time for free. A number of customers contacted The Age and the Sydney Morning Herald after noticing between 10 and 50% of their redraw funds were absorbed into their home loan without any notification. The customers said they believed the money was like savings and that it could be withdrawn at any time. Their anxiety was amplified when the bank failed to return calls. I've rung the bank 3 times and spoken to 2 different departments, only to be told someone will call in 48 hours. One customer said, I'm still waiting. Maybe that customer should read the documents they've got with the bank, the terms and conditions. I would not be surprised if everything I have in my, the redraw or my offset would disappear if they want it to put it off the house. I mean, that's what I'm expecting could happen if it gets really bad. Particularly, I think, in Sydney or Melbourne, with their overvalued property that we're seeing. That even Lawless from CoreLogic is now saying that it's overvalued. Not just all the crazy people on the fringe. The crazy ones who are appearing to be more and more accurate as time goes by, isn't it? So it's absolutely breathtakingly stressful, another customer said. I was managing okay with the stress of the pandemic until this happened. Well, these are people that are not prepared. They don't have a stash of cash at home just in case this happens. How many people are we going to see? I think that'll be the majority, isn't it? It's going to be the majority, guys, that are completely unprepared, that have got no idea the potential of what could happen. Some customers took to social media to express their outrage, while others said they would lodge complaints with Me Bank and the Australian Financial Complaints Authority. That's it. Do your complaints. And then they'll pull out the document and say, look what you signed. Maybe you should read it. It comes as the big 4 banks have pledged to go easy on customers struggling to make loan repayments during the pandemic. The lenders have lifted provisions for bad and doubtful debts, slashed or suspended dividends, and in the case of the National Australia Bank, raised fresh capital to shore up balance sheets. Me Bank was set up in 1994 by industry super funds with the aim of competing with the big 4 banks and helping Australians buy homes. According to its annual report, its home loan portfolio is $26 billion, representing almost 2% of the home loan market. The decision by Me to plunder customers' accounts has prompted speculation among industry experts that it wanted to shrink the size of its loan books and reduce the risk of defaults. Well, yes, that is exactly what would happen. And that could happen at any bank, everyone. You need to plan for these things. Alexander Kelly, a director of casework at Financial Rights Legal Centre, described the bank's conduct as abhorrent. She said she was concerned that a bank subject to the Code of Banking Practice had unilaterally taken away or reduced a customer's access to their redraw facilities. The communication had not been fair, timely, or appropriate, she said. The Code of Banking Practice is clear that communication must be timely and useful. Notifying consumers after the event of closing access to what customers believe is their money is insulting. The takeaway from this is highlighting again that people don't quite understand what they're doing when they're putting money in a bank at all. It's all the bank's money. It's all the bank's money. You just have a right to redraw it again. And even when you put it in their special redraw account, you've got a right to borrow more money back on your loan. It's not... I'm surprised that this is taking people by surprise. It's a sign also that the banks are in trouble, that they're preparing for tough times. It's not just the big 4. This is further compounded by not having sufficient numbers of staff available to answer the frantic calls and no notice on their website. Given all the problems identified in the Royal Commission with banks, this behaviour is frankly a disgrace. One customer, scientist, Monica Genova, said on Monday the bank removed $24,000 from a redraw facility and transferred it to her home loan without notice. She said most of her home loan had been repaid. It came as a huge shock, as the money was considered savings to be used for urgent home repairs. The timing of this, given the uncertainty of jobs during the pandemic, is despicable to say the least, she said. Instead of Me Bank, I now use the catchphrase Despicable Bank. Another customer said $10,000 was transferred from her facility to her loan at a time when her hours of work and that of her husband had been dramatically reduced. And they do this now. No warning, no notification, no explanation. Another Me customer who works in financial services, Caroline White, said her redraw facility had been reduced to 1/3 and $35,000 transferred to reduce her mortgage. I can't believe, after haying the Royal Commission, that they took this course of action, then have such poor execution, she said. The promise of a call never happened. Me Bank failed to respond to a series of detailed questions, including how many customers were affected, the amount of money transferred to mortgages. Why would they answer those questions? Not the business of the newspaper, is it? Why it failed to notify customers, and why it failed to have the infrastructure in place related to the impact of falling property prices on the value of its loan book or due to capital requirements. They did have the infrastructure in place. They could call upon these overpayments to bring them in. Isn't that infrastructure in place? Or am I the only one not too surprised by this? Let me know in the comments. Is this surprising you or shocking you? I mean, I guess you're right. Most people haven't heard of these stories of banks just pulling people in and treating them like crap and kicking them to the curb. Maybe most people don't realize. In a statement, it said the bank had identified that the redraw facilities by some legacy home loans could lead to customers falling behind their original repayment schedule. Me is in the process of contacting affected customers, it said. Some customers could be at risk of not meeting their repayment commitments, potentially leaving them open to financial hardship at the end of the loan term, the bank said. Well, I've had that happen to me. I've had the bank just change my repayments like that automatically. Say, put your repayment up, put it down. But I tend to keep a very close eye on my mortgage because it's my mission to destroy it more than anything. Every month, ring up, spend 40 minutes on the phone while you're drafting and get another tiny discount on the mortgage. It said it was reviewing the personal circumstances of each customer affected and was committed to working with them. I mean, this is the thing. If you've put it on the redraw and then you want to spend it on home repairs or something else, that's you borrowing more money, guys. That's you borrowing more money to do that. That's what... For customers whose limits have been reduced, the bank will look to rearrange financing at the bank's costs. All customers have access to 3 and 6 month repayment holidays. The bank denied the move had anything to do with the liquidity positions of its super fund shareholders, which are facing mass withdrawals from customers under a government scheme allowing Australians suffering from hardship to access their retirement savings ahead of schedule. Me did not ask for a top-up from shareholders to meet capital requirements. We have no need for capital from our shareholders, it said. Our current and forecast capital and liquidity levels are well above both internal targets and regulatory requirements. Our liquidity coverage ratio is currently more than double the regulatory requirements. So there we go, guys. There we go. What do you think? A bank in trouble? Or an overreaction by a lot of people that didn't understand what they were doing and don't understand that it's the bank's money. It's not yours. It's the bank's. I don't know. Let me know your thoughts or opinions on this, guys. I mean, sure, the bank could have communicated a lot better, but I'm not surprised. I'm not surprised. Well, then again, this is something I'm anticipating happening. If property falls, I'm expecting this to happen more, and I'm systematically preparing for it. I guess a lot of people aren't. As always, thank you for watching. Please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join the channel on YouTube or on Patreon. You can support us via affiliate links at Amazon or eBay. You can send us gold using Gold Pass from the Perth Mint. You can also support us by buying our merch from Heiser Says pocket squares made by my wife Rachel, which you can see behind me right there. We also have PayPal if you want to support us that way. Thanks, guys. Have a great day. And watch out for those banks. Take care.